Hello everyone, welcome back. I got some really good ones for you today on this Tuesday, March 31st, 2026. A lot's been going on with those markets. That's what we're going to be focused on for today's video, so welcome back, glad you made it. And let's dive right into these markets, shall we? So we're having a bit of a Tuesday turnaround for the stock market, a little bit of a relief rally, got some short covering going on. I still remain bearish, the three major stock indices overall. I still think we're only about halfway through this correction. We'll get to stocks in a moment though. First, we're gonna take a look at that 10-year yield, throwing an eyeball over at that bond market. We have the 10-year yield down to 4.31%. In the last video, I said if you were bullish on the three major stock indices, you're looking for that 10-year yield to back off, to come down. It has. It's down about 10 basis points since the last video. Kind of the glove fits there, that 10-year yield backing off, three major stock indices going up. Things kind of make sense so far. Moving on to that dollar, that Dixie, that DXY, down 0.65% today, which is a pretty substantial move for the dollar lower, guys. I said in the last video, if you're bullish to three major stock indices, you want to see that DXY trade back into the double digits, and we're down to 99.86, so the glove fits there. Got yields coming down, dollar coming down, pushing those three major stock indices higher. But guys, the plot thickens, so just hang with me. I'm still bearish, and I'm going to give you the reasons why. Crude right now, hanging out at 102 per barrel, still above 100 per barrel. Every day above 100 per barrel crude is going to be a bad day for the three major stock indices. Been saying it, still standing on it. Even with this de-escalation going on in the headlines as of like this morning, crude's not really buying it. It's still up slightly today. The Hormuz Strait really isn't buying it. Traffic is still effectively zero. 138 vessels per day on average travel through the Strait of Hormuz, but the last 48 hours, it's been between 4 and 11 vessels have traversed the strait. So I'd say effectively the Strait of Hormuz is still heavily contested, closed. That's kind of what we're dealing with right now. We also have Iran's parliament recently approved plan to impose tolls, 2 million per passage. US and Israel saying no to that. So we're just gonna have to see how it goes, guys. And even if the Strait of Hormuz opens up like right now, it's gonna still take 6 to 8 weeks to normalize. So I'm still short-term bearish the stock market. We'll get into more reasons why. We have the S&P 500 right now up 2.91% today, 6,528, but it's still below its 200-day moving average of 66.36, you guys. So I'm thinking we're below this 200-day moving average. That is bearish. We're going to pop up. We're going to kiss that 200-day. We're going to bounce off. And we're going to roll back over. If that happens, look out below for the S&P 500. I'm leaning 5,500, 5,750. Throw trash at me when I'm wrong. We have that NASDAQ up 3.83%. That tech-heavy, growth-heavy NASDAQ leading the charge. NASDAQ is generally a little bit more volatile than the other two major stock indices, though, so the glove fits there. NASDAQ hanging out at 21,590. We have the Dow Jones up 2.49% today to 46,341. That Russell 2000, the small caps, up 3.41% today to 2496. Gold right now, gold hanging out at 46.95 per ounce, up 0.4% last time I checked. Silver up to 75.10 per ounce. Platinum 1961. I've kind of been ignoring platinum, guys, and I shouldn't have, because if you scroll down the videos, I used to give platinum its own videos. We talked a little bit more about platinum. I think it was like 1,100 per ounce, somewhere in there when we first started talking about it on this channel. Now we're flirting with 2,000 per ounce for platinum, so good to see it. Still remain bullish and constructive for gold, silver, platinum, palladium. Sure, why not? Throw in a little bit of palladium. So still bullish on the precious metals, still bullish on crypto. We got Bitcoin hanging out at 68,140, ETH back above 2,000, which is good to see, and then Solana at 82.64. So, if the S&P 500 does trade up to the 200-day moving average and then bounce off it and roll back over, then we really start buckling. We could see gold and silver and crypto also sell off to fulfill margin calls. Like basically, guys, when the market starts tanking, traders start getting hit with margin calls. They need cash. So it's not like they sell Bitcoin or gold because they want to. It's just because they need to raise capital and cover those margin calls. So, we could see gold and silver, Bitcoin follow the three major stock indices lower if things really start selling off. But I don't really treat physical gold or Bitcoin as trading vehicles. I don't even treat Solana as trading vehicle. I think you should have like 50 of those for the riverboat gambling trips in your retirement. So I say remain long and strong precious metals and crypto, but I'm just a little bearish short term for the three major stock indices because I'm I'm sniffing out a $5,500 S&P 500, which I think would be a nice, healthy garden variety 20% correction off the all-time recent highs in the stock market. You know, we used to get those, guys. We used to actually get corrections 10, 20, sometimes 25% in the three major stock indices. We just haven't seen that in a long, long time. I feel like the market's completely forgotten that it can get hit with a 20% garden variety correction. So I'm still kind of hanging on for that, but we'll just have to see how things play out. But if crude remains above 100 per barrel, yields continue to climb, and the peace narrative continues to break down, like overall, not on a day-to-day basis, but just from the 100,000 foot level, we keep sending more troops over there and things keep escalating in the Middle East. That's all reasons to be bearish, guys. We also have a Fed that's kind of hawkish lately. This sticky core inflation and rising energy prices have really forced the Fed to push interest rate cuts off into the future. So going into 2026, guys, the markets were thinking they were going to get 3 to 4 interest rate cuts for the year, and that number is down to like 0. Okay, about half the market thinks we're going to get a cut, and the other half of the market thinks we actually might get one interest rate hike for 2026. So I'm just going to go ahead and average that out at 0. We're not going to raise interest rates. We're not going to cut them. If I had to pick, though, I'd say we're going to do one cut for 2026. So that's one thing you're going to want to put on your radar, would be one interest rate cut for 2026. But that's been bearish for markets, because if the market thinks it's going to get 4 interest rate cuts and it ends up only getting like now 1, it has to adjust for those expectations. And the market likes interest rate cuts, guys. So the more interest rate cuts the market can get, the better. We were looking at 4. Now we're getting like 1. Market doesn't really like that. And we might even get a hike, which the market really doesn't like that. But overall, guys, the Fed's kind of taking the back seat right now. It really is energy prices, yields, geopolitics. That's kind of pushing the headlines right now. It's not so much the Fed, but you're going to want, you're going to want to be keeping an eye on those guys. We got a jobs number coming on Friday. So if we come in above analysts' expectations, I think that'd actually be hawkish. That would force us to even push interest rate cuts out even further. And then if we come in below analysts' expectations, say they think we're going to add 125,000 on Friday and we only end up adding 50 or something like that, well, that could actually put interest rate cuts back on the table, which would be bullish for the 3 major stock indices. But I remain bearish on the 3 major stock indices short term. My target is for the S&P 500 to trade in the coming weeks as low as 5,500, 5,750. I am looking for the S&P 500 to pop up, kiss that 200-day moving average, which very close to that, and then roll back over. So where the bulls are saying the 200-day moving average is going to be strong support for the S&P 500, I'm betting that it's actually going to be strong resistance for the S&P 500, and we're going to be bouncing off of that thing, trading lower, and then kind of falling apart, maybe peeling off another like 500,000 on the S&P 500. So we're just going to have to see how it plays out, guys. I think we're still halfway through this correction. And, today's rally in the 3 major stock indices, pretty strong rally, but that's actually bearish price action, guys. And you might be thinking, no way, man, like we're so back, like everything's moving right back up, like it's all good. Cancel your plans, cancel your bearing around, get long these markets, ride the lightning. But I'm saying no, guys, and I'm saying no because this is actually bearish price action. So let me explain. In a bullish posture, like in an overall bullish market, you expect to climb the escalator. You go up in an escalator and down in an elevator. In a bearish posture, in a bearish market, you actually slide the slope of hope and have these intermittent rides up in the elevator that quickly get faded and quickly fall apart. So, we've been sliding the slope of hope. We've been grinding lower for the last few months or so, and we're having these violent little moves up, but that's only short covering, guys. So we're not going to get too much into shorting, but basically you're borrowing shares from your broker, selling them into the open market, collecting a nice little bundle of cash, waiting for the price to go down, buying those shares you borrowed back and keeping the difference. So if you short a stock at $10 per share and it goes down to $9 per share, you cover your short position at $9, you made 10%. So it's the opposite of buy sell. You got buying, selling, you have shorting, covering. Today's pop, short covering. Short covering, overall still bearish. So market grinding lower, sliding the slope of hope, occasional short covering. But do I see fresh new buyers, like fresh blood coming into this market? No. I see people that were betting against the market unwinding those bearish bets, and that is buying, and that's a little bit of a pop. So price action, what the asset is actually doing for the three major stock indices, even though we've had a strong day today, is still bearish. Okay, so again, just sum things up, and then I'm going to let you guys go. In a bullish market, bullish posture, you want to be going up in an escalator, down in an elevator. In a bearish market, you want to be sliding the slope of hope, going down in the escalator, up in the elevator. But those ups, those elevator rides up, they just get faded, shorts pile back in, and they run out of steam, and we just kind of roll back over. And that's what I think you should be looking for. Volume is kind of confirming this to you guys. We don't have a lot of volume right now. So a market that is trading below its 200-day moving average, the S&P 500 below the 200-day moving average, low volume, got a little bit of like strength today, but overall bearish. That's bearish. So that's kind of what I'm going to leave you guys off on. I still remain bearish. Be looking for that $5,500 price target for the S&P 500. We'll see if we get there, but hey, overall still bullish mid to long term. And you know, throw garbage at me when I'm wrong. The correction could be over, but you know, not my base case, guys. Not with crude above 100, not with yields rising, not with the geopolitical backdrop. I'm not buying one day of, oh, everything's good. You know, Trump's probably saying everything's good because he longed the market on Monday. You know what I mean? So on Monday, he longs the market. On Tuesday, he tells you everything's great. On Wednesday, he sells. On Thursday, he shorts the market. On Friday, he tells you everything's going to hell in a handbasket. On Monday, he covers the short position. You see what he's doing, guys? I wouldn't put anything past these guys. They're diabolical. You know, Peter Thiel behind the curtain, pulling the strings for Trump. These guys are servants of Satan. So we'll reconvene as things progress. I hope this video finds you doing well. Thanks for hanging out with me. Like, subscribe, comment, share, whatever. You guys are awesome. And we're just going to keep going, all right? Till next time.